Traders, what's going on, guys? Clinton here. Today we're going to be talking about perfecting chart patterns and if there even is such a thing. Okay, stay tuned.
Swirl.
So in the course of building a trading methodology, there's a need to eventually have to execute on the ideals that you have about the market. You build your directional bias and you have an idea to maybe short the market, but you need precision. And you use that precision with technical analysis. But technical analysis can come in the form of Fibonacci's, Andrew's pitchfork, moving averages, candlestick patterns. But there's also a case to be made about chart patterns, okay? Sometimes the market, out of its randomness, will form, certain structures. And those structures can be coined as chart patterns. They can be flags. It can be diamonds. You have harmonics, which is a whole nother series of ratio-based chart patterns. And, a lot of times traders have a hard time deciphering what a perfect pattern is, or if there even is a perfect pattern. I would say there isn't. Okay, and I love to use this analogy. I look at chart patterns like triangles. Okay, you have acute triangles, you have isosceles triangles. Okay, obtuse triangles. Okay, triangles, they have a specific structure, a specific formation that you coin as a triangle. Okay, but they can come in all different shapes and sizes. Okay, and so I do the same thing with flag patterns. Those are the patterns I like to trade, and I also like to trade counter trend line breaks. They're slightly subjective on occasion, so you want to try to objectify them as much as possible, but they're very effective. They can form amazing wedges, another type of pattern. All right, so understand that there's a set of parameters necessary to really start scaling in and really understanding when and where to start executing on certain patterns. Because if you come at it the same way every time, well, it's never going to happen. You're going to get one flag a certain way, and then the next time you see a flag pattern or something close to a flag pattern, you may not even coin it as a flag because it doesn't fit this perfect painted picture of a flag that you wanted. All right, and so it's really important to understand that you need to build parameters. You need to say, hey, look, these are the rules I have for a flag, but I understand that they can fluctuate. All right, and another thing is you have to take a lot of things into account. You have to take time frame into account. Don't draw a flag on the 5 minute and expect it to be the same in terms of the length of the pole on the 30 minute. Okay, the actual flag itself, the actual consolidation from the extension, don't expect that to be the same width. All right, so I'm going to go into a couple flag patterns. Personally, I like to draw flags on my focus time frame and my entry time frame, the 30 and the 5, and that's going to give you guys a really good understanding on that. Again, flags come in a variety of different shapes and sizes. Have parameters set. I'm going to go over that with you as well. Okay, the parameters that I use to say, hey, look, this is a flag. Okay, if it's not this or within these specified dimensions, then I'm not trading it. Okay, it's a slippery slope if you just consider a lot of different things, certain patterns. Okay, and you guys can use this for any style pattern. All right, so use what I say for your own pattern. But again, if you specialize in flags as well, that's going to give you a chance to really be executing with flag patterns. I'm not going to go into CTLs. All right, I'll keep that for my pros. Okay, so guys, let's move into the charts and let's check out some flags.
I'm pulling over into my charts here. Right now, guys, I have up the pound dollar. On that Aussie, all this year, guys, 2017, we saw a lot of strength coming in since January, okay? And we were playing that strength. We were playing that Aussie buy as soon as we saw spot gold. I think I still have my gold up here. I like to do Fibonacci inversions, and that's what we're going to bring up here. But I was buying up anything Australian once we started popping at 23.6. You can check the Monday market breakdowns, to validate that claim. Okay, I loved buying up this Australian dollar based on that gold heightening, month after week, day after day. Okay, so pulling over into this pound dollar, guys, I have up here a lot of flags that we drew up, but what I wanted to show you guys was a Fibonacci inversion that I had drawn on this thing before any of those flags ever played out. Okay, so again, with the inversion, I like to see momentum come into the market. I like to assume momentum is going to come into the market. And guys, that's what a flag pattern is. You have to understand that a flag pattern is a continuation pattern. And a continuation means a continuation of the overall general trend. So a lot of times you might see traders drawing flags and continuation patterns on smaller time frames, and yeah, it may work out once or twice, but if you're not going in a general move, it's going to eventually hurt you. I talk about in one of my trader tips, going with the statistical edge and doing trend trading. If you see that the market is going to reverse, well, then the reversal is going to be the statistical edge, pushing the market back up into structure, okay? And once I saw that this pound inched on down to these structural lows here, okay, right here at this level is $1.60s. All right, I want to start buying this thing up, especially because gold started increasing in value. So I knew there was going to be a lot of strength coming into that Australian dollar. So if I pull over here to the 4-hour, it's all about where you think the market could buy up into. Okay, the market, anytime the market has huge surges of down moves, okay, huge extensions, huge legs, all right, there are a lot of gaps in this move in terms of liquidity pools, and it's good to assume that the market is going to shoot up into those liquidity pools to collect those orders, and that's the trade we took. That's the trade we took. We wanted the market to come up into those orders. All right, so here was a very nice level, right? And it's amazing that the market came right up into the strongest level of structure there. If I adjust it a little bit, you'll see that our best level was where the market came right up into, okay? So that's why structure is great. It abides by its rules amazingly. So if I pull over into the 30, that's where I draw my flags, as I mentioned earlier. I like to draw my flags on the 30-minute time frame, and I like to draw them on the 5-minute time frame occasionally, but I really love that 30-minute because you get a lot higher predictability in terms of the market breaking to the upside. So we'll just inch the charts along a little bit by little bit to show you guys how these things kind of play out. So you have a huge surge in momentum to the upside, okay? Right here, I think there was a speech by Thursa May. We got to figure it out. But so a huge momentum push to the upside, and this is where we started to see flags started to actually form. So I'll zoom in a little bit even more. And we started to see flags form again. So we're sat here at this 23.6. And remember, we wanted to take this market all the way up into the 61.8% retracement. All right. And very soon, as soon as we started to see breaks above this level here, guys, you see we have enormous surges in price action. Okay, market came down, and during that Asian session, you saw the market spike out of structure there. Okay, and then boom, you have your first flag. You have your first flag. Now, does this flag look like this flag, and does this flag look like this flag? No. All three of these flags look different. This flag actually failed. Okay, I don't want to draw up, all winners for you, because again, you might have presumed this to be a flag. You had a continuation pattern. Okay, you had a move push to the upside. You see the market consolidate, and you had a continuation to the upside, a market breakout. But guess what happened, folks? Boom, this market crashed back down. Now, what's interesting is you try to play a flag at the 38.2% retracement. Okay, so there are a lot of factors that will hurt you or aid you in the probability of your chart patterns playing out. You have to understand the overall market structure. For you to be trying to buy a breakout at a retracement level, a strong structural level, is a bad idea. But buying up into that level, okay, with this flag or this flag, is a great idea. Okay, that's a great idea. So what's the pip spread on these? And then I'm going to go over the parameters that I like to have for my flags. The pip spread on this one is around 20 pips from the stop to entry level. Okay. Now this one's actually somewhat of a wedge. You see the market kind of wedging to the downside. But what you see as well, guys, is the structural bottom also wedging to the downside. But sometimes you'll see this level form here, this low, and you can get a nice squeeze. So then your stops would have been right there, a structure. But instead, folks, again, around 20 points. And boom, you have your explosion out of that level. I like to base my risk reward off of the size of the stop to entry here. Okay, some people that play flags use the pole, use the extension, but I achieve my targets a lot quicker because, again, my targets are smaller. I'll use this 20 pip spread here instead of going from this high at 63.89 all the way to this low here at 62.88. That's a 100 pip move, And if I'm trading intraday on the 30-minute, guys, look, I'll take 40 pips and run any day. Okay, so that's what you see. You saw a nice move to the upside, a nice push. And then boom, notice this thing extended right at around 45 pips, and then it created another level of consolidation. Now you'll oftentimes see, guys, these flags push to levels 3 levels max. You don't usually see a 4th level push, but that goes into your, your Elliott wave theory and all these other different things. I don't really use those things too much, but again, they are very, they're fairly accurate. Okay, boom, you have another flag pattern here. Now, what's the stop to entry spread on this one? Okay, you have a stop to entry spread of, again, 18 pips. Okay, now how long did this consolidation last for? Well, we met our high here at 2100 hours. What's that? 8 o'clock, and we move over in the structure here, and it wasn't until 2 a.m. that this market pushed out of that level there. Okay, so that's very interesting. All right, so again, maybe you saw the overnight that this level held and you assumed, hey, we could get up into the 38.2, so you placed a pending at that level. All right, and that's 9 o'clock, by the way, 9 o'clock. But it was at it was right at 9 o'clock. Okay, so potentially, yeah, you placed a pending at this level. Boom, you placed your pending and you got it, and you potentially probably got your level hit because again, 20 pip spread. You had, if you placed your pending, your target at that 38.2, you hit off on your 2-to-1 risk-reward ratio. Okay, so excellent job. Now, if you try to do that again for the 3rd time at a very strong retracement level, you got stopped out. So the market did enter you did get entered into the market because of the breakout. Market moved up right around 19 pips. Okay, your spread was over 25, so I doubt you would have moved your stops as of yet, and then boom, the market came and stopped you out. So again, sometimes guys, it just happens. All right, sometimes getting stopped out is it's the way it works. But there are avoidable instances where you can limit the amount of fake outs you get. Okay, not every flag is a good flag to play. All right, so what do you guys see here? You see the market come down, sat back down onto structure here. Where did it come down into? Rested right back on the flag, and that's what you'll oftentimes see, folks. You see another surge out. All right, you see another surge out, and boom, you have the market consolidate, and you did have a slight consolidation here, but I figured that this would have stopped you out, so I wanted to move over and show you another scenario where a flag again worked out well. Okay, notice again this GBP/AUD is kicking off at the Australian Open at that Australian time, and then boom, guys, we surged all the way up into the 50% retracement here. All right, so again, another scenario, a completely different flag from these. All right, this looks like the largest stop to entry spread at 38 pips. But again, if your targets are up here at this 50% level, you got 85. And there's no reason why your target shouldn't have been at that 50% level because that's where structure is. Okay, we're not guessing here. We're using actual structure to determine where our levels are. So notice, folks, you start to get some sloppy price action. Why? Why did you not see as many flags kill off? Okay, maybe you have a little situation here, but other than that, folks, you didn't see price action work out as well because remember, if I pull back, I'll do it after I show you some more flags to the sell side here. If I pull back, folks, this is a very strong structural high, a very strong resistance level, and again, you shouldn't be trying to buy the market up with resistance on your higher time frames. You should be actually doing what? Trying to sell it off. Okay, so if you see the market has an impulse to the downside, breaks that 50, what are you going to start to do? You want to start doing the opposite. And you see, guys, it works out really well. And again, these flags look different. These flags look different. This flag comes down, this level again, and a lot of times they do this sloping style thing because price is very dynamic. Market slopes, and then boom, it breaks. You have an impulse leg down. Now, consolidation happened for a while here. You got stopped out because this market came up, came down, and then came up, and then potentially have stopped you out, and then pushed very quickly down to the 38.2% retracement level. Now, the reason I drew a flag back up into the high here was because this is a level that you'll see a lot of retracements back up into structure. Okay, and so if you notice, we see the market come back up in, you see another flag scenario, and then you see us come back up into the 61.8 here, and then again, the market just really starts to range. But you guys get it. Flags come in all shapes and sizes. I have my parameters for this 30-minute. I'll only use flags in my trading from a 10 pip range to really honestly around a 30, potentially a 35 pip range coming from this 30-minute chart. And I would like to see an extension. And and again, guys, if I have a 35 pip range in terms of the stop to entry, I want a pretty big extension to. I want a pretty big pull, a flag pull, because I've just seen on many occasions that the larger the flagpole, the larger the extension, hey, I need a fairly large range, All right, because if you have a large extension to the upside and you only are trading a very thin 10 pips, folks, you're going to see a larger retracement come in probably. Okay, so the larger the pull, the more likely a larger stop to entry spread. Okay, and again, it's actionable at that point. Okay, but those are my guidelines. So from around 10 to 35 pips is my stop to entry spread. I like to see this pull be fairly substantial. I mean, this thing can, I would want it to gross up to, maybe even 50, 60, 70, 80 pips. It really just depends. All right. In this case, I wanted it to come from this 38.2. It was very surprising that it shot all the way up into the 50. And you guys got to think that was a 145 pip move, but it still worked out. It still worked out as long as I had a nice stop to entry spread. Okay. So understand that there are a lot of parameters when it comes to flag. I'm being fairly broad for this video. I go really in depth in my Top Trader Pro series at motiveFX.com, but this should definitely give you guys a lot of detail in that, hey, look, you need to be versatile in how your flag patterns look. Okay, it's very important for that to happen. So guys, if you have any questions, definitely let me know. Your profit is always my motive. And again, guys, come here and get inside that live room. We have a rookie room. It's free to get in. Hop in there, talk to some of the other guys, share strategies, and once you're ready to step up, get in Top Trader Pro, and let's get you live and let's get you making money. All right, so guys, I'll talk to you soon. MotiveFX, I'm out.